What's up, everyone? This is from News and Trends by Ahmed, and welcome back to the channel. Today, we're diving deep into the UK market, exploring 13 assets primed for potential explosive growth in 2024. Now, before we get started, remember this video is for informational purposes only. It's not financial advice, and I'm not telling you what to do with your money. The UK market is full of unique opportunities, and we're going to break them down one by one. From real estate to tech, we'll cover it all. So buckle up, hit that subscribe button, and let's get started on this exciting journey to potentially multiply your money. First up, we're heading straight to the heart of the UK, London. Despite the ups and downs of the economy, London property has historically been a rock-solid investment. Think about it. London is a global hub, attracting people and businesses from all corners of the world. This constant demand, coupled with limited supply, creates a recipe for potential appreciation.
Now, I'm not saying it's a guaranteed win. You've got to factor in things like stamp duty, maintenance costs, and the overall economic climate. But if you're looking for a long-term investment with the potential to weather market fluctuations, London property is definitely worth considering.
All right, moving on from bricks and mortar, let's talk about another UK asset class with a proven track record blue-chip stocks. These are the big players in the UK market, companies with a long history of solid performance and often juicy dividends. Think FTSE 100 companies, established, stable, and potentially less volatile than your average tech startup.
Now I know what you're thinking. Blue chips might not offer the same explosive growth as some riskier assets. And you're right, they probably won't double overnight. But that's not the point. Blue chip stocks are about building a solid foundation for your portfolio, generating consistent returns over the long haul, and potentially sleeping a little better at night.
Okay, so maybe you're thinking, Graham, London property is great. But what about the rest of the UK? Well, let me tell you, there's a whole other world out there beyond those fancy London postcodes. And that's where commercial property comes in. We're talking about things like office spaces, retail units, industrial warehouses, the kind of places businesses operate from. Now, I know what you're thinking. With everyone working from home these days, is commercial property even a good investment? And honestly, that's a fair point. But here's the thing, while some sectors have taken a hit, others are absolutely booming. Think about it. E-commerce is exploding, which means more demand for warehouses and logistics centers. Plus, student accommodation is always in high demand, no matter what the economy is doing. So yeah, commercial property can be a bit more hands-on than residential. But the potential rewards, let's just say they could be very, very worth it. The point is, renewable energy isn't just good for the planet, it's good for your portfolio too. Investing in renewable energy can be a win-win situation, benefiting both the environment and your financial health. There are plenty of ways to invest in renewable energy, from buying shares in established companies to backing innovative startups developing cutting-edge green technologies. You can also look into mutual funds and ETFs that focus on renewable energy sectors. Now, I'm not saying you need to go out and install solar panels on every roof you see, but considering the various investment options available, you can find something that fits your risk tolerance and investment goals. And where there's investment, there's a chance to make some serious money. The renewable energy market is growing rapidly, and early investors stand to gain the most. To achieve that, they're going to need massive investment in things like solar, wind, and hydroelectric power. These sectors are expected to see significant growth in the coming years. Think about it. The UK has committed to net zero emissions by 2050. This means a huge push towards renewable energy sources, creating a robust market for investors. The world is shifting towards sustainability, and that shift is creating some seriously lucrative opportunities for investors. As more countries commit to reducing their carbon footprints, the demand for renewable energy will only increase. I'm talking about renewable energy. It's not just a trend, it's the future of energy production. All right, let's talk about the future. And no, I don't mean flying cars. I mean a future where clean, renewable energy powers our homes, businesses, and even our transportation.
So if you're looking for an investment that aligns with your values and has the potential for impressive returns, this is definitely one to consider. Renewable energy is not just an ethical choice, it's a smart financial move.
Now, for all my risk takers out there, this one's for you. I'm talking about startups, specifically UK startups. You see, the UK has this incredible tech scene right now. It's like Silicon Valley, but with better tea. We're talking about companies pushing the boundaries in everything from fintech and AI to biotech and sustainable living. And the best part, these startups are hungry for investment. They need capital to grow, to innovate, to become the next big thing.
Now, I'm not going to lie. Investing in startups is inherently risky. Not every startup is going to be the next Google or Amazon, but for those who do their research, who can spot potential, who aren't afraid to take a chance, the rewards can be absolutely life-changing.
So, if you've got that entrepreneurial spirit, if you're looking for that home run investment, keep a close eye on the UK startup scene. You never know. You might just find the next unicorn. Now, I'm not talking about picking up a finger painting from your niece and calling it a day. I'm talking about legitimate, researched investments in art and collectibles. Think first edition books, rare stamps, vintage watches, you name it. These markets can be tricky, but with the right knowledge and a bit of luck, you could be looking at some serious appreciation in value. Remember, scarcity drives up demand, and these items aren't getting any younger. Do your research, learn about the history, the artists, the market trends. This isn't about picking something you like, it's about picking something that will appreciate in value. And who knows, maybe you'll discover a passion for something new along the way. All right, let's address the elephant in the room: cryptocurrency. It's volatile, it's risky, and it's not for the faint of heart. But it's also a rapidly growing market with the potential for huge returns. Think about it, Bitcoin was worth pennies a decade ago. And now? Well, you know the story. The key here is to be smart, do your research, and only invest what you can afford to lose. I'm not saying go all in on Dogecoin because Elon Musk tweeted about it. Instead, focus on understanding the underlying technology, blockchain. This is where the real potential lies, and it's already disrupting industries from finance to supply chain management. Remember, this is a long game. Don't expect to get rich quick. But if you're willing to ride the waves and invest responsibly, cryptocurrency and blockchain could be a lucrative part of your portfolio.
Look around. AI and robotics are everywhere. Self-driving cars, personalized shopping experiences, even those creepy targeted ads you see online. It's all powered by AI. This technology is only going to get bigger, and that means big opportunities for investors. Now, I'm not saying you need to go build the next Tesla in your garage. There are plenty of established companies and promising startups already making waves in the AI and robotics space. Think about industries ripe for disruption: healthcare, manufacturing, transportation. These are all sectors where AI and robotics are poised to make a huge impact. By investing in companies at the forefront of these technologies, you're essentially investing in the future. As always, do your due diligence. Research the companies, understand their technology, and make sure their vision aligns with your investment goals. Remember, this is a marathon, not a sprint.
Now let's talk about a sector that's not just about making money, but also about making a difference: ESG investing. ESG stands for environmental, social, and governance, and it's all about investing in companies that are committed to sustainability and ethical practices.
Think about it. More and more people, especially younger generations, care about where their money is going. They want to support businesses that align with their values. This means companies with strong environmental policies, fair labor practices, and transparent governance are becoming increasingly attractive to investors.
This growing demand translates into a massive opportunity for you. As more capital flows into ESG-focused funds and companies, it can drive up valuations and potentially lead to some pretty sweet returns. Plus, you get the added bonus of knowing your investments are contributing to a better world. Who doesn't want that? So, Definitely keep an eye on the ESG space in 2024 and beyond. All right, let's switch gears now and talk about something a little more, shall we say, classic. Classic cars have a timeless appeal that transcends generations and cultures. I'm talking about classic cars. These beauties are more than just vehicles. They are a testament to the craftsmanship and design of a bygone era.
Now I know what you're thinking. Classic cars, isn't that just a rich person's game? Well, yes and no. While it's true that some classic cars can fetch millions, there are also plenty of more affordable options out there. While it's true that some classic cars can fetch millions, there are also plenty of more affordable options out there. You don't have to be a millionaire to own a piece of automotive history. The key here is to do your research. Understanding market trends, knowing which models have a strong following, and being aware of the car's history are crucial steps. Look for cars with a strong following, a good history of appreciation, and of course are in excellent condition. A well-preserved vehicle can be a goldmine.
Think of it like investing in a piece of art. Just as art collectors seek out works with historical significance and aesthetic value, classic car enthusiasts look for vehicles that tell a story. You're not just buying a car, you're buying a piece of history, a story on wheels. Each classic car has its own unique tale, from its design and engineering to its previous owners and the roads it has traveled. And just like art, the value of classic cars can appreciate significantly over time, especially if you find a rare gem. Rarity and condition are key factors in determining a car's value. Now, I'm not saying you should go out and drop your life savings on a vintage Ferrari tomorrow, but if you're looking for a unique and potentially lucrative investment, classic cars are definitely worth considering. But if you're looking for a unique and potentially lucrative investment, classic cars are definitely worth considering. With the right knowledge and a bit of passion, you could find yourself owning a piece of automotive history that not only brings joy but also appreciates in value. Let's move on to something a little closer to home, or at least closer to our potential home bar. Imagine having a collection that not only impresses your guests, but also serves as a smart investment. That's right, I'm talking about investing in wine and whiskey. These aren't just beverages, they can be valuable assets. Now, before you start picturing me sipping on some expensive vintage, let's be clear, this isn't about becoming a connoisseur overnight. It's about understanding the value these bottles can hold. It's about recognizing the investment potential of these liquid assets. Just like stocks or real estate, wine and whiskey can appreciate in value over time. Just like with classic cars, rare and aged bottles of wine and whiskey can fetch a pretty penny. Auctions for these bottles can be quite competitive, with collectors willing to pay top dollar. Think of it like this: as these bottles get older, their supply dwindles, but the demand, well, that often goes up. The aging process can add unique flavors and characteristics, making them even more desirable. And with increased demand and limited supply, you've got yourself a recipe for potential price appreciation. It's a classic case of supply and demand economics. Now, this isn't an area where you can just jump in blindly. You need to be informed and strategic. You need to do your homework, understand the market, and know what to look for. Research is key to making smart investment decisions, but if you're willing to put in the time and effort, investing in wine and whiskey could be a unique and potentially profitable addition to your portfolio. It's not just about the financial returns, it's also about the joy of owning something rare and exquisite. Plus, if all else fails, you've got a nice bottle to open and enjoy, responsibly of course. After all, what better way to celebrate your investment than by savoring it? Okay, so maybe you're tired of hearing about stocks and bonds and you want something a little more tangible, something with a history, something you can hold in your hand. Well, how about a vintage Rolex? Now, I'm not talking about just any old watch here. We're talking about rare, well-maintained pieces from iconic brands like Rolex, Patek Philippe, Audemars Piguet. These are watches that appreciate in value over time, kind of like a fine wine, but you wear it on your wrist. The key here is to do your research. Just like any investment, knowledge is power. Learn about different models, their history, their rarity. You want to be able to spot a good deal when you see one, and trust me, there are deals to be had if you know where to look. And hey, even if the market takes a dip, you'll still have a beautiful, timeless watch on your wrist. Not a bad deal, right? All right, let's switch gears and talk about something a little different. Forestry, that's right, trees. You might not think of it as a traditional investment, but hear me out. Investing in forestry means buying and managing forest land for profit. You can generate income from harvesting timber, and the land itself can appreciate in value over time. Plus, it's a tangible asset, something real and lasting. Now, this isn't a get-rich-quick scheme. It's a long-term investment that requires patience and careful management. But if you're looking for a way to diversify your portfolio with a sustainable, tangible asset, forestry could be worth considering. Plus, you'll be contributing to the environment by planting and managing trees. It's a win-win. So there you have it. 13 UK assets that could potentially explode in 2024. From London property to vintage watches, from renewable energy to forestry, there are opportunities out there for every type of investor. Remember, investing always involves risks, and past performance is not indicative of future results. It's crucial to do your own research, understand your risk tolerance, and consider consulting with a financial advisor before making any investment decisions. But hey, that's what I'm here for. Don't forget to like this video. Subscribe to my channel for more insightful content on investment opportunities and financial growth, and hit that notification bell so you never miss an upload. Thanks for watching. Thanks for